Pinduoduo has taken the market by surprise with a massive earnings beat. Is this the perfect time to buy PDD stock? Hello everyone, before starting video, important information. This video is AI generated and created purely for informational purposes. Welcome to Infotech Stocks channel. Hold on to your hats folks, because Pinduoduo just pulled a rabbit out of the hat. This isn't just any ordinary earnings report, it's a game changer. This e-commerce giant didn't just meet earnings expectations, it blew them out of the water. We're talking about a performance that has left analysts and investors alike in awe. We're talking a serious beat here, the kind that makes Wall Street take notice. Imagine the kind of results that make traders sit up and rethink their strategies. And you know what that means? It means PDD stock is primed for takeoff. This is the kind of momentum that can propel a stock to new heights, and savvy investors are already taking note. This isn't just a fluke, folks. Pinduoduo has been quietly building a powerhouse business, and now the world is starting to catch on. Their innovative approach to e-commerce, combined with a robust supply chain, has set them apart from the competition. They've got the goods, they've got the growth, and they've got the momentum. Their strategic investments in technology and customer experience are paying off in spades. So buckle up, because we're about to dive into why PDD stock is a screaming buy right now. From their impressive financials to their visionary leadership, there's a lot to unpack. Stay tuned as we explore the factors driving Pinduoduo's success and why it could be a cornerstone of your investment portfolio. Before we get into the nitty-gritty of PDD's financials, let's take a step back and understand what makes this company tick. Pinduoduo is all about social commerce. They've cracked the code on combining online shopping with social interaction, creating a fun and engaging experience for their users. Think of it like this. It's like going shopping with your friends, but you're doing it all from your phone. You can share deals, recommend products, and even team up to get lower prices. It's a winning formula that has propelled Pinduoduo to the top of the Chinese e-commerce market. All right, let's talk numbers. Today, we're diving deep into the financial performance of Pinduoduo, a company that's been making waves in the market. In the second quarter, Pinduoduo reported earnings per share of $2.40, absolutely demolishing analyst estimates of $1.80. This isn't just a minor beat, it's a significant outperformance. That's right, they blew past expectations by a whopping 33%. Such a substantial margin indicates robust business health and strategic excellence. This is what we call a knockout punch, folks. It's not every day you see a company exceed expectations by such a large margin. This kind of earnings beat is a clear indication that Pinduoduo is firing on all cylinders. Their operational efficiency and market strategies are clearly paying off. Their business model is working, their growth is accelerating, and their market presence is becoming more formidable with each passing quarter. They're showing no signs of slowing down. In fact, their momentum seems to be building, setting the stage for even more impressive performances in the future. If you're looking for a company that's firing on all cylinders, look no further than PDD. Their recent performance is a testament to their strategic vision and execution. Investors and market analysts alike are taking note, and it's clear that Pinduoduo is a force to be reckoned with in the financial world. Keep an eye on this rising star. It wasn't just earnings that impressed this quarter. Pinduoduo's revenue growth was equally impressive. They reported a year-over-year revenue increase of 66%, reaching a staggering $10.4 billion. To put that into perspective, analysts were expecting revenue of around $9 billion. This kind of revenue growth is simply phenomenal, especially in the highly competitive e-commerce market. It's a testament to Pinduoduo's innovative business model, their strong brand recognition, and their loyal customer base. Future earnings, poised for continued growth. Now let's talk about the future. Analysts are predicting that Pinduoduo's earnings per share will grow by an average of 35% per year over the next 5 years. That's right, folks. We're talking about sustained high growth potential. This kind of growth trajectory is simply unheard of in most industries, let alone the mature e-commerce market. But Pinduoduo is not your average company. They're disrupting the industry with their unique approach to social commerce, and the future looks incredibly bright for this e-commerce powerhouse. PDD's undeniable value proposition. Now, let's talk valuation. Despite its impressive growth and future potential, PDD stock is still trading at a relatively attractive valuation. Their trailing price-to-earnings ratio is currently around 25, which is significantly lower than many of their e-commerce peers. When you consider Pinduoduo's impressive growth rate, their strong market position, and their future potential, it's clear that this stock is undervalued. This is a classic case of a company that's growing faster than its stock price, creating a compelling buying opportunity for savvy investors. Market dominance and expansion plans. Pinduoduo is already a dominant player in the Chinese e-commerce market, but they're not resting on their laurels. They're constantly innovating and expanding into new product categories, solidifying their market leadership and attracting even more customers. They're also expanding internationally, bringing their unique brand of social commerce to new markets around the world. This global expansion strategy has the potential to unlock even more growth for Pinduoduo in the years to come. Analysts bullish on PDD's future. It's not just me who's bullish on PDD. Wall Street analysts are equally optimistic about the company's future prospects. The vast majority of analysts covering PDD have a buy or strong buy rating on the stock, with an average price target that implies significant upside potential. This widespread analyst optimism is a strong vote of confidence in Pinduoduo's business model, their management team, and their long-term growth prospects. When Wall Street speaks, it's time to listen. Navigating risks in the e-commerce landscape. Of course, no investment is without its risks, and Pinduoduo is no exception. The e-commerce sector is fraught with uncertainties that can impact even the most robust companies. Investors must be vigilant and aware of the various factors that could influence their investments. The e-commerce market is highly competitive, with established players like Alibaba and JD.com vying for market share. These giants have significant resources and a strong foothold in the market, making it challenging for newer entrants to carve out their niche. Pinduoduo, however, has managed to differentiate itself through its unique business model and innovative approach. Additionally, macroeconomic factors like inflation and slowing economic growth could impact consumer spending, potentially affecting Pinduoduo's growth trajectory. Economic downturns often lead to reduced consumer confidence in spending, which can have a ripple effect on e-commerce platforms. It's crucial to monitor these trends and understand their potential implications. However, I believe that Pinduoduo's strong brand recognition, their loyal customer base, and their innovative business model give them a competitive edge in the market. Their focus on social commerce and group buying has resonated well with consumers, fostering a sense of community and engagement that sets them apart from their competitors. They've consistently proven their ability to navigate challenges and emerge stronger, and I'm confident they'll continue to do so in the future. Their adaptability and resilience are key strengths that will help them weather any storms that come their way. As they continue to innovate and expand their offerings, Pinduoduo is well positioned to maintain its growth and success in the ever-evolving e-commerce landscape. The time to buy PDD is now, so there you have it, folks. Pinduoduo is a company firing on all cylinders. They've got the earnings, they've got the growth, and they've got the momentum to continue their winning streak. Their stock is undervalued, analysts are bullish, and their future prospects are incredibly bright. If you're looking for a high-growth, undervalued stock with the potential to deliver market-beating returns, look no further than PDD. The time to buy is now, before this rocket takes off without you. Don't miss out on this incredible opportunity.